Hang Seng, though, is shed almost 5% this week, and it has been one of the biggest underperformers.
We will be launching a tailor-made business product on the busiest routes and business routes of the country before the end of this year.
About 23,125. That's the immediate first level to watch out for. 22,928. It's flattish, 30-40 points lower.
Auto anchors are specifically doing reasonably well, is what we have seen.
Nifty is at around 23,000 odd.
We have a kind of a philosophy. We are organically build-up company.
After scaling that 23,000 mark on the Nifty, we've dipped a bit.
Demand improves, prices also will go up. From here on, I see that prices will definitely improve.
The Nifty has reclaimed that 23,000 mark. Dips were shallow. All indices looking good.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that's the day so far, and it has been arguably a quieter day as compared to the big up and up day that we had yesterday. It's also a Friday, so going into a two-day weekend. Could not have said this last Friday because Saturday was working, so that's good. We'll talk about markets, stocks, everything over the next 60 minutes. We're coming to you, of course, from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Surupi here, and Nigel is joining us from the newsroom. Guys, hi, good afternoon.
Hi, good afternoon. I think the question now is, once you've scaled 23,000, you're at all-time high levels. What next, right, for the markets?
But, I'll tell you one, Prashant, I'd say that while it's a quiet day, it's probably not, a bad Friday at all. Because I remember the last time this market was negotiating all-time highs, there were immediate sell-offs. And today we've not had that. We've had, minor sort of, cool off from the dip. But again, the buyers come in. And we didn't give up 23,000 entirely. We were trading above that mark just, I think a couple of minutes, still a couple of minutes back. So good Friday maybe indeed. Good week and good Friday.
Well, that's right, but 60 minutes to go, guys. I can sense it in Surbi's voice. She's looking forward to the weekend, but 60 minutes to go and anything can happen. And who would have thought,
Like you, Nigel.
He's counting the plus 30 for editors roundtable.
Who would have thought at the start of this week that we'll be steady at 23,000 odd? But I think next week what we look forward to is 50,000 on the Nifty Bank. And, hopefully when we're going into the weekend next week, we see 50,000 on the Nifty Bank, which takes the Nifty closer around that, say, 23,500 odd. But 60 minutes to go, so let's get straight to the action.
Absolutely, and I think 50,000 is more punchier, right?
Yeah, nice round figure. Nice round figure.
Anyway,
this was also the week 75,000 was scaled and mounted on the Sensex. So that's also a fantastic number to have on board.
Records all around, right? But just a few points as we always do before we start sort of getting an opinion, etc. Quieter day for frontline indices. The Nifty Bank, of course, which had a 2% up move yesterday, is trying to get past and I guess close above that level, which is 48,832. That is okay. I think now we are at 48,933. So yeah, we're comfortably. Let's see what the close is, because that's the last retracement of the fall, and then you're basically looking at that 50,000 number. Same thing happened with Nifty, and of course Nifty, once it crossed that 61.8, it took 3 days actually for it to get to a new all-time high. Trailing support for the Nifty Bank, actually for both the Nifty and the Nifty Bank, it's the 40 hourly. For the Nifty Bank, that number is 48,235. It's about 1.5% away. For the Nifty, that 40 hourly is 22,645. These are, in a way you can look at them as trailing reversal stops for both the Nifty and the Nifty Bank, the closest in terms of supports. Mid-cap and small-cap indices both are up 0.5%, but market breadth is evenly matched, 1:1. So, it's not all up across the board. PSUs are leading the charge once again. And we'll talk more about that space, defense stocks and a whole host of other names. Advanced decline, as I said, is pretty sort of evenly kind of matched. There you go, actually declines now outnumbering advances, even as the indices themselves, I guess because of specific large weighted stocks, are still up in the green. Reema.
Well, for the week, the Nifty's gained close to about 2%, while the mid-cap index has seen a gain of about 1.2%. So this is the week where the large caps have come back into action. And today, a lot of the contribution, heavy lifting has been done by HDFC Bank. Plug in HDFC Bank, that's up 1.75%, and throw in L&T. In fact, many of the private sector banks are coming back. So even an Axis Bank is higher in trade. But I think that screen is telling you about that mid-cap profit booking, which is now setting in.
Yeah, that's true. I mean, from the highs of the session, the mid-cap index has cooled off a little bit, but we've still got a gain of about 0.2% thereabouts. It's really a lot more about individual stocks, as has been the trend over the last couple of sessions. I mean, I'll still give you names. Don't go by just what that flat index is doing. But we've still got movers and shakers. Look at a Paras Defense, 10.5% up on that stock. Smaller names like a Som Distilleries up and about. Vodafone Idea, because of the UBS report that we'll tell you more about. That stock's been on a tear right throughout the session, up about 7%, even as we speak. Some of these EMS players, electronic manufacturing services, Sirma, for instance, 6.5% on the upside. So, plenty of movers and shakers. As Phenolex Cables, where numbers were very good, still retaining a 13% up move. So it is, of course, as expected, very, very stock specific. But yes, take that point on board that at an index level, there is some profit taking in the mid-cap market. Nigel.
Well, that's right. Well, let's get straight to the action then. How do you position yourself in the final hour of trade? I think Mitesh is back. Kush Bora actually is back with us. Beg your pardon on that one. Hi, Kush. Good afternoon and good to see you in. What's the view from here on? 23,000. I think you were hinting that, maybe, in fact, the markets could move up. I recall last Saturday as well. Tell us more.
Well, the Saturday trailer did turn out to be a good picture at the end of the day, didn't it? So I think on the whole, we are looking at, a consolidation around this level. But the 23,000 mark is perhaps now acting, will start acting as a support zone, because the put option base that you're seeing here is way higher than the call option base. I think, this will act as a strong base. If not this, at least the 22,800 mark will start acting as a strong base. But nonetheless, it'll not be a bad idea to take some money off the table from Nifty. As far as Bank Nifty goes, I would hate to disappoint you. So I think 49,500, 50,000 perhaps by the next week or a little later, is very much on the cards. The catch-up rally is on. And I think the Bank Nifty trade is the one that you want to get into right now.
Okay, all right. And what about individual stocks, Kush, that you want to give us?
A couple of names, Nigel. Bharti Airtel consistently doing well today. Also, if you see it's trading, with a gain of 1.5%, 1400 might prove out to be a minor resistance. But beyond that, I think 1440 is a very reasonable target. 1375 comes in as a stop loss. BSE is making a good headwind. So from the support of the 50-day moving average, the stock starting to inch higher. That's one stock that one should have on the radar. 28, 25, 2950 are the positional targets. 2650 is where the stop loss comes in.
Okay, thank you very much for that. Let's get to Ashok Leyland. That's in focus as they just reported their Q4 numbers. There has been a near 20% jump in the company's profitability. But for more details, the fine print, Sonia now joins in. Sonia, the decline that we see in the stock price is because the markets have started correcting, or there is a miss on the numbers?
So it's largely in line with estimates. The numbers were expected to be on the weaker side, and they are weak. So, that's why perhaps you're seeing a little bit of profit taking as well. Remember, the stock has gone up almost 20% in the last 1 month. So there is definitely some money being taken off the table. The revenues are in line with estimates. No surprises there. Down about 3.1%, coming in at 11,266 crores. The margins actually beat estimates, have gone up 310 basis points year on year, but that's also because of the fall that we've seen in raw material costs. EBITDA margins have come in at 14.1%. This is led by a 60 basis points gross margin beat this time around for the company. The profits at 900 crores are bang in line with estimates. The estimate was around 920 odd crores. So profits are up almost about 20 odd percent. There is a one-time loss that the company has incurred to the tune of 70 crores versus a gain of 56.4 crores. Now remember, the commercial vehicle space has been under pressure for a while. In fact, the last couple of months have been, have seen a volume decline for the commercial vehicle space. So Ashok Leyland, in that sense has seen weak numbers. But going forward, the management commentary, of course, is important to see whether there is any improvement or not in the commentary. Back to you.
Okay, all right, got that. Sonia, thank you very much. So that's Ashok Leyland. That margin expansion definitely quite impressive. Well, let's move ahead and take the conversation forward with our first guest on the show. We have Prakash Diwan joining in. Prakash, happy Friday to you. Happy 23,000 and, whatnot. But the first stock on the radar, as Sonia just pointed out, Ashok Leyland is what we're looking at. What do you make of the numbers? Because it's very true that we're yet to see a very sustained, meaningful traction in CV volumes. The numbers have been fairly patchy. And the stock also an underperformer compared to what we've seen in the rest of the mid-cap market. It's not been the biggest of the high flyers. Your thoughts?
Yes, thank you, Surbhi, for all the best wishes, and of course, congratulations to all of you as well. And as Rima pointed out, we keep forgetting that 75,000 mark on the Sensex, which is a significant milestone. We're just a quarter of a century short of that magical 1 lakh mark. So hopefully, we will see that. On Ashok Leyland, my sense is the expectations were fairly muted. The numbers have been very much in line, as Sonia explained, with that. There's nothing very significant in terms of a change in the cycle for CVs. We've seen that come through with Eicher numbers, even Tata Motors for that matter. So you'll have to wait for some more time, maybe 2 quarters for that scale up. And typically, Ashok Leyland benefits more when all its variants, all its verticals start contributing, whether it's the tippers and dumpers, whether it's the buses, and of course the long haul trucks. So there's been not much of a improvement in any of these yet. So I would believe as the new budget comes through and then kind of some of the metals and mining businesses start revving up in the second half of FY25, you probably see that cycle turn up. Right now, if you want to look at Ashok Leyland's given out its numbers, the last of the lot actually on the auto side. My sense is it's time to go back to Tata Motors, which is giving you such a great opportunity to enter. Just because of that cautionary guidance of sorts, there was a little bit of profit booking, which has been a bit overdone, if you ask me. Tata Motors probably stands at this point in time as the best option within the auto pack, including comparing it with the Marutis and M&Ms of the world for a 40-50% upside for the year ahead.
Okay, let's get to the other big mover today, and that's on the way up. Vodafone Idea still holding on to a near 8-9% rally. Today, UBS has upgraded Vodafone Idea to a buy, and they've pegged the target price at 18 rupees. So significant upside from current levels, and this is the highest target price on the street. 18 rupees we're talking about. Now, there were many upgrades that we've seen in the in the last 1 month or so, whether it's Citi, whether it's BofA, but they had a neutral call on the stock. UBS is the only one which has gone out and said buy, and their target price is at 18 rupees. 2 triggers for the company: 1, a tariff hike; 2, potential relief from the government. A potential tariff hike, according to UBS, is priced in. They're expecting, 15-20% in the next 1 or 2 years, but according to them, that's priced in. But what may not have been priced in is a potential relief from the government on their AGR dues or spectrum. If that comes through, then according to UBS, it's a bigger trigger for Vodafone Idea than Airtel. Vodafone Idea stands to benefit more. And considering both the companies are currently trading at the same valuation, according to UBS, the risk reward is more favorable for Vodafone Idea, which is why they have a neutral call on Bharti Airtel and Indus and a positive call on Vodafone Idea. The stock is very, very excited. And also bear in mind, year to date, Vodafone Idea is down 6%, when Bharti Airtel is up 35%.
You know what's really interesting and what stands out in some of these reports, specifically the UBS one, Rima, is that this is more like an options play, right?
Yeah.
These reports are not talking about growth in business and internal metrics moving higher, not all of them. The whole sort of aspect
there is, if you read the whole report, they also
correct. But you've obviously picked out the biggest pivot points, the biggest triggers, right? And that hinges on some AGR due getting knocked off, or some equity investment coming in, which has come in for Vodafone Idea. And now the next one seems to be a relief on the due payments.
Which is why all in the last 1 month, there have been many bull cases, bull scenarios which have been laid out. So I think for Kotak, the bull scenario was close to about 23 rupees, while I think the bear case was 7 rupees. And even Citi had a bull case of close to about 25 rupees. So if that optionality of a government relief comes through, then the benefit for Vodafone Idea could be quite significant, because what people are anticipating is the relief could be as high as 35,000 crore rupees. That on their market value, on their overall, the AGR dues is 70,000 approximately. 50% relief, which means 35,000 crore in terms of a relief, is what the industry is expecting. But also, as UBS said, probably a tariff hike may have been already priced in by the market, given the way the stocks have moved.
The other connection, this is maybe slightly unrelated, but is also, I think the rise in Vodafone Idea is also, I think, a bet on political continuity.
Yeah.
In the sense that, all of this, of course, hinges on relief from the government.
And the government
support.
has its own equity interest in the company as
exactly.
well.
So, the government is, and that's a bigger kind of thing, that the government is saying that we very much want
a three-player
market. It's going to be around.
Yeah.
But the government, of course, maybe we'll know on the 4th of June. But I think, I think that's the other thing why it's getting, and of course, the tariff hike is supposed to happen post-elections, right?
On a lighter note, 35,000 crores of relief anticipated. For myself, if I get 3,500 crores of relief from the government in the form of income tax or whatever, I'll take it with both hands.
That's 500 or there's a crores after that?
No, and that's what I'm saying. Even 3,500 crores of relief, I'll take with both hands.
You just said 3,500 crore of relief, but yeah.
No, 3,500. Yeah, let me correct myself. No crores.
Yeah, Surbhi, I think you need to cut off those crores. I heard you say it twice or thrice. I was thinking, what's going on? 3,500 rupees is good.
3,500 rupees relief on income tax, I'll be very happy. But I'm not even getting that. So I'll put the question to Prakash. Prakash, very quickly. Are you willing to play the options game on a Vodafone Idea?
So as a matter of disclosure, I am into that. And very clearly, I think it's been a series of salient changes that have happened in terms of, the moment the fundraise was announced, the promoter group putting in money at a significantly higher, you remember that, 14.87 was the level at which they subscribed. And then, of course, the successful follow-on offer. So I think more or less, as Rima explained, what we are expecting going forward is the bankruptcy risk is out. This continues to be a third player and not just a marginal third player, but a significant third player, given the fact that they've started issuing or looking at ordering equipment, newer equipment, putting up towers, going towards the 5G. So all of that probably is what works out well. I'm not sure about that 18 rupees. Market's probably reading that into too much into that, saying it should happen very soon. But it could take some time, is my sense. And if you're patient, you could still get a 20% upside from here if that 18 rupee mark was to be met.
Okay, all right. Prakash, I wanted your view on BSE. The stock is buzzing in today's trading session. We had a note coming in from Investec earlier. Vamakshi joins us to run us through all of those details. Vamakshi.
Well, absolutely. BSE is on our radar. Investec has initiated a long fast on BSE. Now, what this essentially means that this is a high conviction, short-term analyst idea. Now, there are obviously concerns around the regulatory risks with respect to the FNO post-elections as well as budget. And the stock did see a correction of around 7% in the past 1 month. But nevertheless, what Investec highlights is that the company has managed to clock strong volume growth in equity derivatives. They've managed to capture nearly 8.6% premium market share in the month of April. They also believe that the company could benefit from market share tailwinds as well as margin triggers, and this in turn could offer stability to its earnings. Profitability in FY25 is also expected to be boosted by positive regulatory developments, which includes the unbundling of clearing charges, increased cash volumes, as well as higher co-location income. Overall, they expect 40% earnings CAGR from FY24 to 26, and they also believe that the company could maintain an ROE of almost 30% plus. They believe the valuations at nearly 30 times of FY26 earnings are quite attractive, and given that, they've gone ahead and initiated a long fast on BSE.
Okay, thanks a lot for that, Vamakshi. Prakash, this one has been a big mover. You have the unlisted share NSE as well that's got excited post those results, the dividend pay as well as the adjustment. But what's the view on BSE?
I think it's a wonderful business. There's no doubt about it. But FY26 is too far off. There's too much of regulatory overhang that warrants a little bit of a softer premium multiple to these businesses. I wouldn't want to pay 30 times FY26. So there's so much uncertainty, unpredictability about what could hit them, and the revenue profile changes dramatically overnight. So that's a risk involved here. It's fairly valued. Every time the chances of the NSE IPO go down or soften, the BSE stock starts getting a bit more center stage is what happens. So apart from that, I don't think there's any new triggers that you look for. You would have to buy it on dips the way you had some days back when there was a little bit of a fall. So when you get that 10-15% off, that's the time you accumulate. But otherwise, at this point, I won't ride the moment.
Okay. Got that. By the way, Prakash, good afternoon. Hospitals, we spoke to many hospitals today. On the back of earnings, we had Max, Yatharth, Fortis. What's the best play? Medanta's come off some 15% from the recent highs, from 1,500 down to about 1,100. If one doesn't have any hospitals in their portfolio and wanted to buy one, what's the best best way to get exposure and why?
Good afternoon, Prashant. So I don't know why you chose today to speak to so many hospitals when things are looking so rosy. But nevertheless, it's always good to understand this business from a secular perspective. It's a great team. The only stock on the business that I have found to be very resilient in terms of its ability to maintain margins and still grow at a very defined clip is Narayan Dutta. So if you look at NH as compared to some of the bigger names, the ones that have probably been more mature in terms of established businesses like Apollo and Fortis and all of that, this is one business that doesn't need to market itself too much. It's running to capacity. I mean, very, very close to capacity. The APROB is fairly consistent if you look at from a yearly perspective or a quarterly perspective. I haven't seen any upsets there. And the way they're managing scaling up, it's a bit gradual, but it's very promising. So I would definitely look at this rather than try into something which is still too established or has very few facilities to back the business. This is much more robust in that sense and resilient, as I said.
Got that. We'll take a quick commercial break here. Prakash, thanks very much for that. By the way, I was thinking about Vodafone Idea. The other thing which struck me, and you were talking about these price targets, right? And Prakash was also mentioning 21, 18, etc. Usually in this market, you look at, you take any sector, any company, you look at price targets, consensus, they're all behind where the current price is. Price target is 1,500, stocks at 2,000, 2,005. Here, you're getting price targets now which are slightly higher. Right. I think what's happening also is that people are...
One now, all the others are 15 rupees. This is the first one where it's above the
18. And then 21, which
That's
is at
22
and 23. Well, I'm just saying that I think it's also happening because there is strength in numbers. One does it. It's just, there is also that because
there's
it's
a herd mentality.
But it also in a way it tells you that there is also, because there is reputational risk, right? For something like this, it's kind of coming out of the depths of crisis, and it has to really turn around. A lot of things have to go right, and that's why I guess they are being cautious as well. That's the point. So when they say 18, I mean, if things work out, it's not going to be 18. It's going to be much higher. That's the point I'm trying to make.
But I think I completely take your earlier point. This has a lot of play on political continuity as well, and a lot of the targets veer around to the the chorus on the electoral side, and then the expectations here. Perhaps there's a linkage there, which which only sounds logical. On that note, we have to take a very, very quick break. We'll come back on the other side, and we'll have Aditya Sood of Incred PMS joining in with some views.
Okay, welcome back. So what, 5 points? So it's absolutely flat at this stage. Nothing going on very much. 22,972 is where we are at. Aditya Sood is with us, portfolio manager at Incred PMS. Aditya, good afternoon. Good to have you with us here. Thanks very much for your time. The question many are asking us is, what's the best way to sort of play the upside post 4th of June? if the numbers are what the market wants them to be? Is it PSUs? Is that the pack where there'll be a sort of a lot of action? Is it something else? How do you think about that if you do think about that?
I think so. We are at a very interesting juncture in the market, right? Because if you look at positioning today, we have seen a fair bit of FI selling going through. Incidentally, it has coincided with the MSCI China doing well. 17-18% up move on MSCI China. So if you talk to GEM managers, essentially, there are a lot of FIIs who don't want to take the election risk. And, once the election risk is behind, possibly, there could be a bit of reversal. Now, the good news is that, with such heavy selling, which has gone through, possibly mean reversion in FII flows would be watched, keenly. And that is how we are trying to position ourselves in stocks, wherein FIIs can, possibly come and buy. So that is one bit of the market. On the domestic side also, I think so there is fair bit of cash which is sitting in, MFs apart from, what we get from the SIP flow. So this is a perfect recipe wherein possibly, if you get a positive surprise, stocks can do well. But our approach typically has been to focus on something which has not done well in the past. And what we are seeing is that, increasingly in this market at an elevated level, people are becoming, value seekers. And wherever you see value getting, if you see an element of surprise coming through in terms of, the numbers getting reported, you are seeing, fair bit of re-rating happening, fairly quickly.
But where that answer, I'll come to. I know your approach has been to kind of sort of find stuff which is not done well. Absolutely the right way to go about it. But for once, if you can put that momentum hat, where will what looks primed for that sort of bursting through the gates higher if you get that surprise 4th of June?
I think so. Momentum has to be looked in conjunction with under ownership of both DII and FIIs. So at an elevated level in the market, if you find a stock wherein there is no institutional ownership and you see earnings momentum trending up, and this is what we have seen across our various stocks that we hold in the portfolio.
Sure. These are not recommendations.
I'll just taking a cue from hospital discussion that you were having. So for example, if you can find a stock which is underowned and trades cheaply, stocks can be up 30-40% within no time.
No, but just to press on that point, Aditya, you said that you're looking to position where perhaps there's a greater chance of FPIs increasing their ownership. So does that logically come back to large caps like banks? I'm just going for the most obvious sort of guess over here. But beyond that, what could be the areas you're looking at to play that under ownership sort of strategic tactical move?
So if you look at, certain baskets in the market, FMCG is something that I have been constantly highlighting for, I think, so last 2-3 months. We find consumption as a basket, which is underowned by most, at this point in time. So what you are seeing is that, there is a divergence between rural and urban, which has started to play out, which is there in the data now. Slowly, if you look at Marico, HUL, Dabur, most of these companies are doing well. MNC Pharma is a very, very interesting space. So most of these MNC companies have been trading at, possibly a 10-year lowest multiple. Now, what we are seeing here is that the growth is, trending upwards. So if you look at, Pfizer, for example, they had, a lot of drugs which were impacted by anilium. And obviously, you have a favorable base there. So if you look at, GSK Pharma, for example, the top line growth has been very, very tepid for last 10 years, possibly. And this is the first quarter wherein we have seen a earnings beat. So that these are some of the areas which we find interesting, and obviously they are not very widely represented in portfolios.
Okay, all right. Hi, Aditya. I'm looking for some names. We've got the broad idea, looking for underperformers, looking at some FMCG stocks, MNC names as well. Give us a few names. The last time you joined us, you gave us a couple of names. I think we spoke about KDDL, Landmarks, ABFRL. What else? What's new?
So the top holdings that we have in the portfolio is a combination of, going by this theme, we have been a very long-term buyer in a company known as Newland Labs, which obviously is perhaps one of the best performing pharma stocks, post the COVID low that it made. We find that Newland is clearly a very, very unique story. Innovation quotient is very, very high. There is a huge tailwind of, essentially a biosecurity security bill getting passed in the US. And now it is going to, I think so, it is much clearer because, after tariffs getting slapped on auto and solar, it is very, very clear that, for innovation, US would see, Indian companies as a perfect partner. So if you look at a company like Newland, they were already supplying to a company known as Karuna Therapeutics, which had been acquired by Bristol Myers Squibb. So what we essentially see as an extension of this thesis is that, these companies have proven capability. They have a 40-year track record, which is impeccable track record in terms of US FDA. So these are, some of the themes wherein tailwinds are there. Tejas obviously has been a long-term holding for us now. I think so there was a fair bit of surprise on the numbers per se. And that is why, the stock has seen such a huge re-rating in the last quarter itself, right? Because people never believed that the BSNL tender would be margin accretive for them. But what they have demonstrated in the past quarter is essentially that gross margins have been reverted. And obviously, there was an element of semiconductor cost getting built into gross margin. So what we have seen is that, they have reverted to 13% EBITDA margin. And now with this telecom, capex story picking up, we do believe that Tejas has a very, very bright chance of possibly, extending the BSNL contract to a Vodafone Idea as well. So that is a very interesting way to play indirectly the telecom story without getting exposed to the balance sheet risk. And the third company that we have in the portfolio is the Intellect Design Arena, and our long-term structural call on this company has been that margins would trend up. In the last quarter, what we saw was that obviously, they vacated the GEM contract and top line was tepid, but that was widely expected. If you look at Oracle versus Intellect margins, there is a very large differential. Oracle is at 40-45%. Intellect, we believe that, possibly 21-22% margins can head towards, 30% over a period of time. There are, product companies generally have a lot of operating leverage built in. So these are some of the structural plays that we like. More importantly, we like companies which are challengers or the companies which are having huge tailwind and are gaining market share structurally.
Aditya, these are stocks that you've had in your portfolio for a long time now, whether it's Newland, Tejas, Intellect Design Arena. Any new stocks that you have, bought recently or you're evaluating right now?
So there are very few stocks that we have resorted to, add in the portfolio. I think so it is about more about sizing as a play in the portfolio. But what we have added recently is a very small hospital known as Indraprastha Medical. Now, if I look at this hospital, if I have to just benchmark them on valuation, obviously, this is a PPP between Apollo and the government of Delhi. So if you look at this hospital play, essentially last 30 years, they have been into existence. They have got an excellent reputation. Stock was trading very, very cheap. They have reported a 125 crore PAT. When we bought it, the market capitalization was 1,500 odd crores with 250 crores of net cash on the balance sheet. This was the cheapest hospital play. More interestingly, this is the one of the highest return on capital employed hospitals that you can, invest into, because the return on capital employed is northwards of 32%. Now, the real reason why the Indraprastha was possibly cheap was they have not expanded over the last 30 years. But as we understand, possibly, this cash flow accretion would lead to, some sort of expansion or increasing their bed capacity by 40% over a 2-3 year period. So what we have seen is that, any stock which has been categorized as value, as and when growth returns, there is a massive re-rating potential. So as a core thesis, we like companies wherein P multiple can expand and earnings can also compound.
They just have one hospital, right? That one in Delhi. Just that one hospital. Or...
Yeah, that is correct. They have got 750 beds, basically.
Yeah, no, as one of the oldest ones.
So one of the things that...
No, the market cap is now 2,200 crores. You said you bought it when the market cap was 1,500.
Yes.
Just to press that point, for someone who wants to own a hospital business now in their portfolio, is there something which makes sense? We had an earlier guest who was saying that he likes Narayana. Your thoughts, Aditya?
Yeah, Narayana has been an excellent company. See, the problem with the sector today is that, a lot of companies a lot of hospitals are trading at, anywhere between 25 to 35 times or 40 times EV by EBITDA. So if you just logically step back and think about, the ARPOB, the return on capital employed, the cash flow that it makes, it is very difficult to buy a hospital stock today based on cash flow, right? Because most of these stocks are expensive. So what we are trying to do here is that, we are trying to strike a balance between growth and buying it at a reasonable price, because any which ways the multiples are known to the market, right? So it is more from a perspective of, if I treat Indraprastha as quasi-government and half as, Apollo subsidiary, and if Apollo is trading at 50 times earnings, obviously, the stock is mispriced. Narayana is an excellent franchise. I have held, Narayana in the past. But we also own, DM Aster here. We believe that after the capital allocation move that they have made, possibly, the expansion which is going to come through is going to be 15% CAGR in terms of bed addition for them. And at a 40,000, sort of a ARPOB number, I think so, they have got some headroom in terms of expansion of ARPOB and expansion of margins as well.
Okay, so Indraprastha and Aster DM, 2 hospital stocks in your portfolio. Got it. Aditya, good conversation. Thank you very much for all the specifics and all the perspective. Wish you a good weekend, and we look forward to the next call. Well, the market's absolutely quiet, not much happening. The mid-cap index also dipped into the red actually for just a bit. It's absolutely flat on the 3 key indices, the Nifty, the Sensex, and the mid-cap index. Bank Nifty better off today with a gain of about 0.4%, still being retained on the screen. So that's a pretty swift cool off and some profit taking basically ahead of the weekend and the big event that is lined up. Let's now shift focus to some index changes that we are expecting. FTSE is likely to announce some changes to a couple of its indices. Let's ask Vivek what they are. Vivek, what is the expectation?
Well, today evening, just post market hours, we are anticipating that FTSE will go ahead and release the list of additions as well as deletions to 2 of the indices that we track. One of them is the FTSE All Cap Index, and the second one is the FTSE All World Index. Now, when you're talking about this particular index review from FTSE, it largely covers, the recent listings. So you'll find IPOs, you'll find companies that have either spun off or, mergers. So any specific corporate actions, that's the only one that will be being considered by FTSE for this particular review. So which are the stocks that could make the cut this time around? JSW Infra, expect flows of almost $38 million in case it comes. The other one is Honasa, Happy Forging, Celloworld, DOMS, Inox India. The next stock on the radar is IREDA. This could see flows of close to $57 million, and Tata Technologies, the other one, could see flows of over $34 million. Along with that, remember, even Sensex would be announcing the list of changes it expects as far as its own constituents are concerned. Adani Enterprises expect to replace Wipro. It could see flows of close to $118 million, while Wipro could see outflows of close to $56 million.
Okay, thank you very much for that. Adani Enterprises is quiet today, but it did rally at the beginning of the week, and it's up close to about 10% this week, despite not moving at all today. And DOMS is the other one that he spoke about from FTSE. We'll be reporting numbers later in the evening. We will slip into a very short break. As always, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. Also, a few BTST calls for the weekend lined up with our experts.
Welcome back. Well, it appears to be a bit of a day of consolidation because the markets are as flat as can be and we're almost done with the trading session. But let's get in Nimesh to tell us what is he picking up in D-Street chatter. Nimesh.
Well, actually, not a bad outcome, so to speak. Yeah. It's a flat day, but again, all the three indices hit a fresh high. And after that, you've seen some bit of profit booking. But from a flow perspective, again, it's a mixed day, a bit of bias towards positive. And again, the PSUs are well bid. So that's the space which has again been well bid, and there is a bit of buying as well in that particular space. So that clearly stands out. I guess, the only thing is that after a big rally yesterday, we don't have so much of a cushion of the short in the system. So that's something to watch out for. And I guess next week is going to be even equally important just ahead of the very big event. So I guess markets can be just consolidating in the next few days from here on. But the good part is that some bit of money is returned to the table from the larger FIs. We saw that yesterday as well. Despite the block deal, they were net positive. Even in today's market, the number will look large, but do account for a couple of large block deals, including the Adani Port block. So because the seller was not an institution, which is why you'll see a large number again in today's market. But as I said, flat as it can be, but at least there is buying interest in some select names and some PSUs as well.
Well, that's right. And yesterday we saw one of the most powerful short covering bounces that we've seen in the recent past. But individual stocks, Nimesh, what are you picking up?
Well, so the first name is HDFC Bank. After a long time, it looks like some bit of buying is back in that particular name. A couple of reasons for the stock to do well today. One, a selling pressure from a leading long-only fund is largely over. And now some domestic funds are quite active buyers as well. And that's the reason why HDFC Bank is buzzing in trade today. The second name is Adani Ports. A large block, nearly 1 crore shares got changed hands today in Adani Ports. In terms of details, I understand a strategic investor was a seller and a lot of domestic and long-only funds were buyers in today's block in Adani Plus. So the disclosure will be interesting there. The third name is Stark, a small real estate company, but that's been buzzing in today's market. There were multiple block deals as well today. And I understand a leading family office was a buyer in today's block. The results are next week, so watch out for that in TARC. And the last is Samvardhana Motherson. Again, a strong pullback in the last couple of days. I understand the FI interest is back in this particular name, and there are buy flows. Expect high delivery volumes in Samvardhana Motherson today.
Nimesh, the Adani Ports bit is interesting. Stocks up 40% this year. It's, and of course, some would argue it's the strongest sort of business within the Adani group. You're saying that there has been a large block and, some funds, etc. have come in?
Yeah, that's right, Prashant. So, just to clarify, in terms of a strategic investor, my understanding is when Adani Ports bought over Gangavaram Port, the promoters of Gangavaram were given some shares of Adani Ports. So, I think that entity was a likely seller. They sold 3 crore shares some 10 days back, 10-15 days back, and now they've sold the remaining stake as well. So, looks like it's largely a clean-out trade from that particular strategic investor. In terms of buyers, I understand one of the long-only fund from US. They were small buyers. A couple of domestic mutual funds were also buyers as well. So it's a mix of institutional investors who bought today. But from a seller perspective, it's the strategic investor who've cleaned out in today's block deal.
All right, Nimesh, thanks very much for that. Interesting sort of list of stocks as always. And we will come back with some of these over the next few sessions as well. Well, that's D-Street Chatter with Nimesh as always. But let's tell you what a buyer said today for a reverse trade when we come back on Monday. We have Kush Bothra joining in for that. Kush, what do you have?
Hi, Prashant. A couple of trades, one from the cash space, one from the F&O space. TVS Motor is doing well. It's closed above the weekly resistance that we saw, or rather the highest point of the week for this week. So from a near-term perspective, 2300, 2375 are the levels to look at. 2175 is a support zone. From the cash space, KPIT Tech is doing well. It's almost at the 2-month high. That there was a gap resistance that is being taken out today. So again, from a near-term perspective, 1600, 1640 are the levels to look at on the upside. 1530 is a good support zone, so should act as a stop loss.
All right, Kush, thank you for that. We'll come back to you for more, but those are short-term trading ideas. But we got good numbers from Honasa earlier. Stocks, of course, been up and about since the morning. Mangalam is with us to sort of talk about this one. Mangalam, afternoon.
Well, good afternoon. In a sector which is parched for growth, any company does a little better than the industry. The street likes it, and in that, Honasa has gone ahead and done 3x faster than competition in terms of the products that they are selling, and that's led by underlying volume growth of around 27% in the fourth quarter. For the entire year, it was a little over 20% as well, and that's resulted in 20% revenue growth as well. Yes, it is a smaller base. Yes, the company is expanding offline, etc. as well, but in doing so, operating leverage plays out too, and 21% revenue growth has actually led to a turnaround in their EBITDA of 33 crores versus a loss of 3 crores, and that's reflected in the bottom line as well. A 30 crore net profit is what the company has posted. Now, while they're growing, they're also gaining market share in key products, key categories. 120 basis points market share improvement in face wash, 40 basis points in shampoo. For the entire year, they've increased their offline presence by about 34 odd percent. And, 18% of their revenues this year also came in from products that were newly launched. So those pipelines are firing for the company as well. And outside of Mamaearth, some of the brands that they're seeding, Dermaco, for instance, which is a 500 crore brand now, they have a target of 1,000 crore for that. And for the others, like Aqualogica and Dr. Sheth's, they have a target for close to 500 crores in annual run rate over the next 3 to 5 years, along with 250 crores for something like a B Blunt as well. And to add to all of this, they've also gone ahead and made an acquisition for the R&D capabilities of Cosmogenesis Labs, a company which has, formulation expertise, research and development, nano manufacturing lab, a deal that closes in the next 4 to 6 weeks. So brokers are calling this one of those quarters where the company ticked nearly all boxes, and that's explaining the kind of move that we're seeing on Honasa.
Thank you very much for that. A company which has not ticked all the boxes is Orchid Pharma, down 8%. Ekta joins in with the details about their Q4 numbers. Ekta.
Well, yes, a disappointing set of numbers which has come in for Orchid Pharma. So the revenue was up only around 3.4% on a year-on-year basis. And even on a Q-on-Q basis, the revenue did see a decline. It came in at around 217 crores versus 220 odd crores. What also disappointed were the margins, which came in at only 13.3% versus 18.9% year-on-year. The EBITDA came down by around 27% year-on-year. And on a Q-on-Q basis as well, the margins were 13.3 versus 16%. That really trickled down in terms of the profitability, which came in at around 33 odd crores versus 59 odd crores. And this compares to 33 crores versus 29 crores Q-on-Q. So a disappointment which has come in for Orchid Pharma, which has been pretty much a top-down disappointment, with the margins really standing out as the key negative.
Thank you very much for that. Hemang Jani is now with us to take a few questions as we wrap out this week in about 15 minutes. Hemang, afternoon. PFC, REC are big movers today, and we're unable to find out the reason behind this kind of strength. What's happening here?
PFC, REC, basically, you're seeing a bit of a traction for the entire PSU theme, and particularly when you look at the numbers. The PFC numbers which were out, now it is quoting at almost 33% discount to REC. And when you compare the numbers, let's say, there is a 22% quarter-on-quarter growth, much better credit cost, and even the provisioning towards Discom is lower. So, after the concerns that we have had about, the provisioning that these companies will have to do, what is coming out is that even after that provisioning, the companies are performing well and valuation-wise far more attractive. More so, PFC, as I said, is at 33% discount to REC. So there is certain amount of interest in this pocket.
Okay, so those are the power financiers which have had a pretty decent run today. Let's talk about some more movers and shakers. Interesting names that still find traction. Bharat Dynamics is one, which is up and about. Paras Defense is the other. Some of these private names, private sector names on the defense side, defense and space, they're looking interesting this afternoon. Hemang, hi, good afternoon to you. So we've seen the huge rally, right, play out on the whole defense side, and HAL has been the poster boy. But the question is, do you still like something enough to put fresh money to work?
It's been a dream run for the defense and railway names. When I look at the market cap, when I look at the numbers, when I look at the valuations, I'm a little concerned about the way it has really gone up. Just to give you a perspective, HAL is having a market cap of 3.5 lakh crore. Valuation-wise, we can all debate, it's 50 times trailing, and growth is something that people are hoping for. But my feel is that if at all you want to participate, I think private sector players would be slightly better off, names like maybe Bharat Forge or L&T, rather than chasing only the PSU names, because you have wide portfolio and diversified business versus just one category and with much better margin profile. So while the momentum is great and people would be rejoicing, traders, but I'm more comfortable buying into some of the private companies in the similar space.
Mangalam was just telling us about Honasa. Bikaji is also a place where we've seen pretty good numbers, growth coming through. Do you like either Bikaji or Honasa?
I think both the companies came out with good set of numbers. Honasa particularly, if you look at the details of the results, in many categories, they are growing much faster than the competition. The volume growth has been very strong. So given that there is a fair bit of store expansion, certain category-wise detailed work that they've done, this looks to be a very interesting, company. So we do like Honasa, and we think that there is a case of 22-24% kind of appreciation over a 12-month period.
Okay, got it. Hemang, thank you for that. Do stay on. We have some more questions for you, but we do have to take a very quick break. Come back and then we'll be in the final leg of this week's trading session. Welcome back. You're with us on Closing Bell. So very, very quiet close to what has been otherwise a good week for the market. Let's look at some more sort of corporate conversations that we've had during the course of the week. Now, IMFA reported a weak fourth quarter. The volumes were slightly higher, but overall the numbers were still weak. We caught up with Mr. Subrakant Panda, MD of the company, to talk about the outlook. Take a look.
Broadly, if you look at that for Q4 FY24, our average realization, like you said, was roughly about 102,000 or so. Going ahead for the ongoing quarter, we expect prices to be higher by about 3,000 to 4,000 tons, if not 3,000 to 4,000 rupees a ton, if not a little bit more. So broadly, I would say for the first half of the year, and as you know, we don't really go beyond predicting 2 quarters at a time. But for the first half of the year, for each of the quarters, I would comfortably predict an EBITDA higher than 150 crores. We would expect EBITDA margins to be around the 20% margin or a little bit more than that, in fact. In as much as the expansion is concerned, we are expecting to have the entire capacity online by middle of 2026. So we will have the entire capacity available for most of FY27. A quick update on the project: we have received environmental clearance. It has been recommended, so we should be getting it any day now.
Okay, some more earnings reactions that are playing out. One of them is Manappuram Finance. Good numbers, and I think the stock is moving up. NII growth of 32%, a profit jump of 35%. So Manappuram Finance is higher in trade. The other one is Aegis Logistics. Came out with numbers about 2-3 hours back, and it's a 17% up move on the stock. A revenue jump of 15%, margin expansion, that's driving a 40% increase in the company's profitability. So this stock is on fire. But on the way down, it's Rico Auto, which is struggling a bit. It's a top-down miss. So there's a decline in their revenues, a contraction in margins, and that's driving a 35% decline in the company's profitability. And once the numbers came out, you saw the stock slip quite a bit. Hemang, Amara Raja is a stock that you look at very closely. What's happening here?
I think the company will be announcing numbers on 28th, and people are expecting almost about 12% kind of a volume growth with almost about 12-13% kind of operating profit margin. Recently, the company has done tie-up with some of the OEMs. Also, political event, will have some role to play, depending upon who forms the government. So I think there is certain amount of interest which is there in the battery companies, both Exide and Amara Raja mainly because of the strong result expectations.
Okay, that is Amara Raja in focus. Let's just go back to the large cap screens. Very quiet, just 17-18 points down. Not much is moving, but HDFC Bank is in leadership position, up almost 1.7%. Now, remember, yesterday's FI numbers were very, very good after, I don't know how long. I mean, it was a triple-digit buy figure in excess of 4,000 crores. Now, not sure if that's going to repeat today or not, but again, the kind of large cap buying we've seen, HDFC Bank, L&T, the hope is that that's going to become a sustained trend, this FII inflow. Hemang, on banks, what's your pecking order? What would you look at buying afresh?
There is a case for certain amount of catch-up when it comes to the banking sector, which has underperformed big time. You look at last 6 months, 12 months, even beyond that. Numbers have been by and large decent. What I liked most was the fact that something like ICICI Bank, State Bank, the numbers have been pretty good. No real negative surprises either in terms of credit costs. The growth outlook also looks quite okay. So I would be comfortable, buying into this, particularly when you look at the markets around. Many pockets have really gone up, be it, certain themes, be it broader market. So this is one pocket where you have a comfort of both the better numbers and valuation. So I think it's a no-brainer.
Okay. All right, just want to focus on some more mid-cap companies. We spoke with Zaggle today. Now, Zaggle had been buzzing on the back of a good fourth quarter performance. Profit and revenue saw a stellar jump. Margins, of course, contracted. The stock started the day pretty high. Now it's cooled off as the mid-cap rally kind of fizzled out. Let's just listen into the management on the outlook ahead.
Growth projection, we have upped our growth projection for this year from earlier guidance was 40% plus. Now we are able to give you a guidance of 45 to 55%, and we are going to double in 2 years in terms of size. While we believe we'll be similar to current levels, we want to be a little conservative, and we see margin expansion, etc., kicking in, in the coming years, maybe 2 to 3 years and beyond, because we see tremendous opportunity to capture market share. See, these kind of opportunities do not come every day, and some of it is on the back of regulatory actions that happened recently.
That was Zaggle. Hemang, do you track the stock? Have you checked out the company, Zaggle?
Yeah, we do track it. Very interesting company, particularly in the, kind of product offering that they have in the corporate segment. There is a lot of scope to roll out very interesting products. Performance, I think they are in an early stage of the growth. So I don't think one should really worry too much. But it would be good to have a small exposure to a company like Zaggle. which is into this cash management and interesting products on the dining and many other lifestyle related products. So we do have a positive view there.
Okay. All right. Got it. Hemang, thank you very much for being with us this afternoon and taking us through a lot of those stocks that we've discussed. Wish you a good weekend and we look forward to the next conversation. Well, with that, we're down to the last couple of minutes of trade. So let's start closing this out. It has been a good week for the market, ending on a tepid note, but as they say, perhaps slow and steady wins the race. So the Nifty hitting the historic next level of 23,000 in intraday action. Of course, the close will happen just below it. Let's talk about the movers and shakers. On the upside, HDFC Bank, L&T, Bharti Airtel, Axis Bank, these were the stocks that were leading from the front. The Bank Nifty is still retaining some green. Nifty, Sensex, Midcap Index have flattened out. But the Nifty Bank was actually the best performing index today. Beyond banks, Bharti Airtel was a strong mover, about 1% higher. Ultratech Cement had some follow through with about a 0.5% gain. So that's the list of gainers. The profit taking was evident in some auto names and IT names. So some examples would be, for instance, Mahindra and Mahindra, Hero, also lower from the auto arena. We talk about Asian Paints down about 1%. Adani Ports shaved off some of yesterday's excitement, down about 2% as well. And then, you had the heavyweights like TCS, ITC and Infosys, which were on the lower side of the screen. Let's talk about the mid-cap market. Of course, it's very, very earnings-driven today. The mid-cap index fizzled out. The breadth is also slightly negative as we are winding up the day. But individual movers and shakers as usual. Phenolics Cables, strong earnings reaction, about 12% higher. Vodafone Idea on the UBS report, talking about a possible upside.